Hey guys, Steven's coming to you this evening. We're going to try something new for class this week. I'm going to record the lecture that we would have given in class had we been able to meet together. So, Matthew and I would love your feedback on if this is working and if you guys like these recorded lectures, or if you would rather us just posting the PowerPoints for you to have and support you in your work. So we're going to continue our conversation. You guys started last week. You did some research on famous entrepreneurs, and you talked a little bit about ethics. And so we're going to continue our conversation with owning and operating a business, which is going to cover both chapter 5 and 6. Let's remember, what is an entrepreneur? An entrepreneur is a person who recognizes a business opportunity and then organizes, manages, and assumes the risk of starting and operating that business. I think one of the most important things to remember about entrepreneurs is they are risk takers, and they are the ones who are putting sometimes everything out on the line to start and operate a business in hopes of fulfilling some sort of economic want or need that they've identified within an economy. Small businesses are traditionally those businesses that are independently owned and operated, where the owner usually acts as the manager. Oftentimes we refer to small businesses as mom and pop shops. And if you've been following the news at all recently with the outbreak of the coronavirus, obviously you know that a lot of the small businesses are the ones bearing the brunt of this economic downturn. So the IRS classifies businesses with less than 500 employees as a small business within the actual tax code of the United States. So why would you want to be an entrepreneur? What are some of the benefits of owning and operating your own business? Well, first, you get to be the boss. You get to make those crucial decisions. You get to do something that you are very passionate about. And, you wake up every day excited to go to work and to truly invest not only your financial resources, but your time and many other things as well. You get to be creative. In many jobs, when you go to work for someone else's business, your creativity and your abilities are often stifled because you're doing what you're being told to do instead of being able to create and work based on a specific vision or passion. You get to build something that's larger than yourself. In business, we often refer to your company as an enterprise, and the most successful entrepreneurs are those who build enterprises that are internationally recognized. The Apples, the Googles, the Teslas of the world. There's lots of flexibility. I do think one of the biggest misconceptions about being an entrepreneur is that you have all this time to go play golf, and you have all this time to do whatever you want to do. Owning and operating a business is not just a job, it is a commitment. And usually you are living, breathing, and eating your company. It is not a 9-to-5 opportunity. Now, that being said, when you are the owner of the business, if you need to go do something for your personal life, your kid has a soccer game, you want to go play a round of golf, you do have the flexibility to do that as the owner of the business. Some of the downsides of being an entrepreneur, first and foremost, how do you raise that startup capital? As a small business, how are you going to get the money that you need to start your actual business? Are you going to ask friends and family for an investment? Are you going to go to the bank and get a loan? Are you going to ask what are called venture capitalists, whose job is to invest in startup businesses? The But getting the funds to start your business is often the biggest challenge of owning and operating a business. As the entrepreneur and as the owner of the business, you are ultimately fully responsible for that business. And it's a lot of pressure when you go to bed every single night and others' livelihood is directly dependent upon your actions as the owner. And whether they get paid or not, as your employees, that's a pretty heavy burden to bear. So that's definitely one of the downsides. Long hours, we've already mentioned that being an entrepreneur and owning and operating a business certainly is not a 40-hour-a-week job. Many times you're working by yourself. And then again, there's uncertainty. We all could identify businesses in our community right now that 6 weeks ago were probably thinking this was going to be a great year. And 2020 had a lot of potential. And many of them are just trying to survive. I just read a Facebook post tonight from Matador. They are closing through the middle of April. And Matthew and I had lunch there last Wednesday. We got to go. We practiced social distancing. But, they were pretty optimistic when we saw them. And, that's how quickly things can change when you own and operate a business. Data shows 80% of small businesses fail in the first 5 years. If you are a restaurant, that number is closer to 95%. Restaurants are the most competitive industry to try to own and operate a small business in the United States. So you still feel like, yes, I want to be an entrepreneur. How do I actually start a business? Well, the first thing you have to do is write a business plan. A business plan is an actual written document that you oftentimes would take with you to a bank or to potential investors. And it basically just is the owner's manual for your business. So it's going to describe all of the different aspects of your business. What are you going to do? How many employees are you going to have? Where are you going to operate? Are you, all the different things that an investor would want to hear and know before they said, yes, we're willing to give you money for your business. If you continue in our marketing pathway, as juniors, you'll take entrepreneurship as a year-long class, and you will actually write a business plan for the business of your choice. So that's in your future as well if you stay in our marketing pathway. So once you've decided to open a business, there are certain things that you need to consider about the owning and operating of your business. And that really is, how am I going to organize the business? How are we going to own the business? And there are three main types of ownership that you need to be familiar with. The first is what's called a sole proprietorship. Sole proprietorship is a business that is owned and operated by one person. Now, why would you choose to be a sole proprietorship? Well, it's the easiest way to own and operate a business. Very, very easy to set up, very easy to maintain. You get to keep all of the profit as the owner of the business. The tax burden is lower. So you're not going to pay as much in taxes. Now, the biggest downside to being a sole proprietor is that you are entirely responsible for all of the liability. So if you are a sole proprietor and your business fails, you are on the hook for all of the money that is owed by the business. So they can take your house, they can take your car, they can take your savings accounts, anything and everything that you own. If you owe money to people and your sole proprietorship goes out of business, they can take your personal assets. Additionally, as a sole proprietor, you're limited to your skills and experience. And again, there's a lot of financial risk for being a sole proprietor. The next kind of ownership an entrepreneur can choose is a partnership. And a partnership is as you would imagine, a business that is owned by two or more people, where you are sharing the risks and the rewards of owning and operating that business. Now, why would you want to be a partnership? Well, first and foremost, you're going to have access to more money. Instead of one person being solely responsible for generating all of the startup capital, you now have that responsibility spread out among potentially many people. Obviously, you're going to have a better mix of skills and talents, and you're going to share some of that responsibility. You know, I talked earlier about the pressure that entrepreneurs feel when they are trying to make payroll and trying to make sure people can provide for their families. Well, that responsibility is shared in a partnership. The biggest downside to a partnership, as you might imagine, just like in any personal relationship, there can be conflict. There can be challenges. Many times business partners don't agree on how the business should be run and managed. There is still a lot of personal financial risk. Partnerships are still fully liable. So if your partnership goes out of business, you still owe all of that money personally. Now the good news is you're mitigating some of that risk because you're only responsible for your part of the pie, if you will. So if Menifee and I owned a business and we were 50-50 partners, I would only be responsible for 50% of the debts if the business failed, whereas a sole proprietor is responsible for 100%. Obviously, as a partnership, you have to share in the risk and you have to share in the decision making, which for some people is a benefit, but for others, giving up that control is harder to do and could potentially be viewed as a disadvantage. The last kind of business ownership is called a corporation, and this is the most common type of business that we know and think of. A corporation is simply a company that is registered within a state and operates totally separate from its owners. The biggest advantage is that the owner of the business, or the owner of the corporation, has absolutely no liability personally. So if the business fails, the owner just walks away and they can't take your house, they can't take your car, they can't take your savings accounts. Another huge advantage of being a corporation is that corporations are the only type of business in the United States that are allowed to sell stock. So if you want to sell stock in your business, you have to be a corporation. That is the law. And then lastly, your business exists long after the original owners move on or perhaps die. I always think about Walmart. What happened to Walmart when Sam Walton died? Well, not much. I mean, were there sad people? Sure there were. But the company itself kept, plugging right along and being the juggernaut that we know that it is. Some of the disadvantages of corporations, very difficult to set up. You need an attorney, you need a certified public accountant. You pay double taxes. Not only does the company pay taxes, but so do all of the employees. The United States government loves to regulate corporations. And traditionally, corporations are much slower to make some of the crucial decisions that need to be made. So that wraps up our lecture. I hope these video lectures will be beneficial to you. Again, please give Menifee and I some feedback about what you think. If it's helpful for he or I, or perhaps both, to walk you through these notes, or if you'd rather just have them, the PowerPoints posted. At this point, go back into Classroom, and you can find the types of business research assignment that we've posted there, and you can follow the timeline for getting that done and submitted that was emailed at the beginning of the week. Hope everyone is doing well. We miss you guys, and we hope that we'll see you again here real soon. Talk to you later. Bye-bye.